people see that, hey, she was running her own crypto prop trading shop at 21. And then, she scaled it up and she was doing all of these angel investing. What people don't see are the 19 other things that I tried to do and I failed at.
Welcome back to 40-Minute Mentor, your podcast on a mission to raise aspirations and inspire the next generation of category-defining founders and world-class investors. Today, we're back with another episode in our popular VC feature series, and we're joined by none other than Ash Arora, who was named as a Forbes 30 Under 30 and is the youngest partner at LocalGlobe. Before joining LocalGlobe in 2022, Ash was the investment lead for crypto unicorn Polygon's venture arm, with incredible LPs such as Sequoia, Lightspeed, Softbank, and Tiger. Ash has a fantastic reputation, so I am incredibly excited to dig into her career to date, plus hear her invaluable advice for any founders that might be listening who are currently fundraising. Ash, a massive welcome to 40-Minute Mentor. Thank you so much for joining us. How are things?
Thank you so much, James, for having me. Really excited to be here. Things are well, busy as always, but very well.
Good stuff. Well, let's warm you up with a few quickfire questions so our audience can get to know you a little bit better. So please finish the following sentences after me. Question 1. Being a successful VC means to me...
Something that I definitely aspire for, don't think I am today, but backing the best founders in the world as early as possible and being as helpful as possible.
That's a great one. The moment in my career I'd love to go back to is...
When I was in banking, it was my first job at Citi, and I would love to go to that 21-year-old and tell her, you will never figure everything out. Do not lack confidence. Have confidence in what you actually know and believe in, and just be stupid enough to say that, hey, I don't know something.
Yes, that is such good advice. Thank you. I wish I could tell my youngest self.
That's a good one. I would go back and say, you don't need to figure out what you want to become at this age or at any stage in life. You just basically need to do what makes your heart happy, what you actually truly love and you enjoy. It'll never feel like work a single day in your life.
So true, so true. We're getting so many pearls of wisdom from you already, Ash. I'm very excited for this. The final quickfire question, the one thing I'd like to change about VC is...
The opaqueness. I believe founders, operators, and anybody else who's in the tech ecosystem should have more visibility and clarity of how decisions are being made inside a VC, and even kind of giving sort of feedback and working with founders without taking credit for it.
Great point. Well, thank you, Ash. I'm really excited in this conversation. I've heard amazing things about you. My team met up with you at the C Ventures Summit not too long ago. Your reputation precedes you, so it's a real joy to have you on the podcast. But before we dive into all things VC, I'd love to hear a bit more about your upbringing. What was that like? What were your early career aspirations when you were growing up?
Oh my God, it would change with the season. So I grew up in Delhi, not like a very sort of well-settled, rich, accessible part of Delhi. So yeah, I think initially everything was about money. Hey, get yourself educated, make enough money so that you can basically sort of live a quality life. And that kind of money is not, hey, let's buy like $1 million penthouses. It's more along the lines of let's have 3 meals a day and ensure that we can provide quality education for our family. So yeah, I think my aspirations initially were, let's make money. How do you make money? In India, in the Indian context, it'll always be become a doctor, right? So that's why you see so many Indian doctors. It's just a thing. It's a stereotype because it deserves the name. I think I wanted to be a doctor for a fairly long time. Every season, I would want to change the kind of doctor I want to become. I landed on neurosurgeon for about 6 years of my life. So that was fairly long. And then when I was in high school, I realized I can't draw to save my life. And the sight of blood makes me want to faint. So it ended immediately before it even started. And then I fell in love with economics, macroeconomics specifically. And yeah, I wanted to kind of pursue that in high school, which is kind of rare with science. And yeah, did economics and finance in my undergrad as 2 majors.
Awesome. And you alluded to your, and I was smiling because my grandfather was a doctor. I come from the usual stereotypes in terms of Indian families, lawyer, doctor, but it's true. It's so true. And I definitely broke with tradition as well. You started your career at Citi. You alluded to that in earlier on. Would love to know, I mean, there are going to be people listening to this that I think are probably
working in banking at the moment that probably desire to move into VC or into the startup world. So tell us a bit about those fundamental years and how did those experiences in banking shape your career thus far?
Oh, that's a really good question. I think it's when you do economics, finance, or anything that is non technical on the business side, it's like you have to do your years as a consultant or a banker or whatever, at least back in the day, because there were not enough startups hiring freshers. So, yeah, I think my perspective was hey, banking is interesting, has economics, has finance. Those things are very exciting to me. And on top of it, I get to be around really intellectually stimulating people. When I joined, I was in investment banking and then I switched over to markets. In markets, I was looking after this one vertical of companies called liabilities. So, liabilities were companies that did not have enough assets on their balance sheet. So, that by default included all the startups because the only asset on their balance sheet was the capital that they would raise, specifically software startups. So from that lens, nobody really wanted to on the trading floor, nobody wanted to work with these clients much because hey, you don't really get big bonuses when you work with companies that don't have enough assets. So because I was like the analyst on the floor, I was not getting a performance bonus at that stage. And I was not managing like an order book. So that's why I started working with them. And because of that experience, because I managed that portfolio, grew up in the organization, and basically started working sort of with an order book of my own, ended up in commodities. I kind of basically had that exposure of working with like tech founders. And I saw that journey. I saw like so many startups becoming unicorns while being their banker. So I think that to me was definitely more sort of, intellectually stimulating. It was creating value out of nothing, truly creating value out of liabilities, right? To me, that was so fascinating. And to the point, by the way, Citi has rebranded liabilities and it's called something else now. I can't really remember, but that happened after I left. Because I think they also realized that, bro, these are not liabilities. They are like future assets.
Yeah, definitely. Awesome. And I guess that probably explains how you then moved into crypto unicorn Polygon's venture arm as investment lead. I guess as you said, you were sort of seeing this future direction. So I'd love to learn a bit more about what did that role as investment lead look like? What was a typical day to day, and what were the kind of real standout moments from your time at Polygon?
Oh, wow, there's so much to talk about. But how I ended up in crypto was because I was asked to, again, at Citi, I was asked to do a research project on cryptocurrencies. So this was right after the second Bitcoin bull run, and everyone in the financial world was like, hey, what is this asset that doesn't have any kind of background, that has no adoption, and still has like such high retail demand and seems to be kind of continuously going up in price? So as an economist inside me, I was like, okay, I need to dig deeper here. I need to understand the economics behind a new asset class being born right in front of my eyes. So yeah, I went very, very deep. I started my own crypto prop trading shop on the side, did that for a while working with the government as well. And then I joined Polygon Ventures. At Polygon, it was a like ride of a lifetime. Honestly, I have so much massive respect for the founders. I recently bagged one of the other co-founders in his new venture as well. I'm just like, I'm so surprised that that quality of talent sort of was building in blockchain when blockchain was actually not even a very big thing, right? This is like 2016, 17. So it's just immense respect. So I was hired to help with the $500 million fundraise that we did, spun the $100 million fund out of it that we had raised, deployed it in early stage Web3 companies globally, helped build out the team, day to day, basically doing X number of meetings. I can't even remember. Working weekends, working 18-hour days, barely sleeping. That was basically life for a very long time. Learned a lot because I feel like when information is bombarded at someone like me, there are two kinds of people. I feel like you can either go into, hey, let's just kind of look at less and go deeper, or let's look at more and sort of not as deep, but like more visibility and comprehensive understanding. So I think as a VC, the latter is what I did there. And as a VC now, the former is what I do here. So I think it's basically like it's been a learning journey for me personally. And both of them are like really helpful depending upon the kind of fund strategy that you're deploying and the kind of mandate that you have in the fund. But yeah, I think the blockchain comprehensive visibility and like the wholesome understanding that I got, like today, if there's a new vertical that comes out and there's like innovation happening on new builders, I would know or understand a little bit of it already because I've invested in something, or I know another team, or I know a subvertical where I basically personally angeled, etc. So I think it just is something that has given me like immense visibility and a really good knowledge set.
Awesome. And I guess in terms of how that will set you up for your career in VC, it would be great to hear about how you made that transition. What were the most difficult parts of that move? And I guess the transferables, because obviously it's a very aspirational move to make, but it's not the easiest one. And as you say, the VC industry can be quite opaque at times. So actually, we're really keen to pay it forward to anyone else that might be looking to make that move and learn from your experiences.
Yeah, I think honestly my example is not really the best because I always, it's ironic, right? And it's very, very sort of uncool of me to say that do not go into banking if you want to become a VC. I tell everyone, become an operator, become a founder if you want to kind of eventually do investing. There could be different kinds of investing that you end up doing. You could basically be, if you're an operator, I feel like that's a very big weakness for me. A lot of the times when I'm working with founders, I do not have that depth and that level of understanding of the day to day. And I'm someone who doesn't like to pretend either. So then I will just say, hey, I really don't know, but I will potentially connect you to three operators in an adjacent sector that I know very well, and maybe they can help you out, but this is not my strength. So I feel like if you're a former operator, the kind of day-to-day granularity, maybe like tax advice about something, right? Like what should be the organizational structure for your BD team, like very granular stuff. I can sort of do first principles thinking, but I can't say what works, what doesn't, right? So I think that is basically something that I feel I lack, which in my opinion could very easily be fixed if you have operations experience. So that's what I would always recommend other people to do. The way I entered the space, headhunters reached out. I was working with a bunch of headhunters and interviewing with a bunch of funds. How I got to LocalGlobe and like all the factors that went into that consideration is a very detailed LinkedIn post on my profile. I'm happy to send the link and you can maybe plug that in. I evaluated 52 parameters and sort of ranked all the funds that I was talking to, and LocalGlobe ranked the highest. So that's basically how I joined them. Culturally, I would say it's been a big shift. I think Indians are, by the way, I think as an Indian, I am always late. Punctuality is not something I really understand, I guess. And I work very hard on it and it's improved, but it's just not punctual, right? Even today, I was 15 minutes late. It always happens and it just sucks, basically. So, yeah, there are so many sort of, personal as well as professional, cultural things that I've kind of sort of realized and faced in the last couple of years being in London. But I mean, it's London. What's not to love? It's an amazing city. And I love my team. I think the way we operate is also very different in our industry. And yeah, it's just very collaborative and very empowered at the same time.
We'll definitely add a link to that post, but would love to just understand a bit about what it is that makes LocalGlobe so special. I mean, I've had the pleasure of working with people from LocalGlobe, and it's a unique feeling when you just are in the offices and just the people around there. But do you mind sharing a bit more about, having worked there for a few years now, what makes LocalGlobe so special? And for those that maybe don't know the fund, do you mind sharing a bit more about what LocalGlobe does?
Yeah, absolutely. So we are a pre-seed, seed stage, sector agnostic fund based out of London, looking at all of Europe and Israel. I personally look after blockchain and I spend a lot of time in AI as well. I mean, who isn't spending time in AI right now? What sets us apart are our fundamental principles and values. We are extremely high on empathy and EQ and kind of always being in the founder's corner. Our incentives are also never really misaligned. We are never the kind of investor who wants to kind of get paper money. Because we are early stage, we want to ensure that the founder has everything right for themselves, around them, within the boundary conditions that they can operate within, so that they can build a longer term business. Because we are not in this business to get like a 5x, 10x return. We are in this business to basically build the next $100 billion company. Hopefully, every single investment that we make gets to that stage. So, yeah, I think the sort of feedback that I've received from our founders, as well as other founders who've been working with the fund for a very long time, has always been LocalGlobe is always going to do right by us. that level of trust and faith. Like we are never going to be selfish from a perspective of, hey, let's grow our ownership to X amount, which is not justified. And then the cap table looks not very pleasing to sort of like a growth stage investor. We don't want that kind of a situation to happen. So it's very important to ensure that you're doing right by the founders, and then they can deliver the returns that you need in the longer term. And then we can do right by our LPs from like a financial lens as well. So the one example that I love to quote is Wise. We've been investors, I don't even know for how long, I think more than 15 years. And so the company IPO'd a few years ago, and yet we are still shareholders. Yet we attend every single meeting with the founders, with the board that we can. Yet we still call up, the senior management, and we throw like innovative ideas at them. Like the number of ideas on blockchain that I've thrown at them is insane. So it's basically the sort of collaborativeness, even after 10, 15 years that we have today, is what sets us apart. We kind of ensure that we are never like prioritizing our returns over what's right by the founder and the company.
Amazing. It's a truly special place. And as you say, a fund that is just so highly regarded amongst founders and operators and everyone in the ecosystem. So thank you for sharing that and bringing that to life for us. You mentioned you invest in blockchain, AI, I guess the broader kind of Web3 space. Where did your interest for these areas come from? And I'd love to hear a bit more about kind of some of the startups you've invested in, why you did, and why their founders stood out to you.
Yeah, absolutely. So I think blockchain was very sort of surprising and sudden. When I came across crypto, I went very deep into Bitcoin, I went very deep into Ethereum, because I was running a trading shop on the side. And in India, the taxation was not clear, which is why, there was a lot of stuff that we had to figure out. And then we shut the trading shop and we started angel investing instead. So I started running like an angel network back in Southeast Asia, also expanded to Dubai. And yeah, so I think it was just kind of like one after the other, kind of a domino effect, that I became like a Web3 investor. And during the bear markets, I've seen now 3 crypto bear markets. During the bear markets, I would also look at Web2, because you want to kind of invest, you want to work with the right kind of founders, but like you don't have enough companies that are either raising or they are building. So yeah, I started doing Web2 as well. It just came together. But I think personally for me, way I entered investing was through infrastructure, like the blockchain infrastructure and the distributed ledger technology. So that by default is something that's very exciting to me. So I basically would go after infrastructure companies, middleware, etc. And when the AI sort of, chat GPT moment happened, which took AI mainstream, I was still very excited about like infrastructure middleware. So I started looking at open source AI agents, etc. So the running joke with me and my friends is I was doing blockchain and open source AI at one point, and that basically what do the two have in common? Both of them don't make money from a free cash flow perspective. So yeah, I think it basically is something like I'm a VC who likes to invest in businesses that are not making like FCF directly. But yeah, I think since then I've kind of started doing a little bit of vertical AI as well. I've recently done like an AI insurance company. Before that, I did a blockchain middleware company, and both of them are doing exceedingly well as businesses. So yeah, it's very diverse taste right now. It's very hard to pinpoint.
No, that's cool. And in terms of the founders that really stand out to you, what is it that sets an exceptional founder apart from the rest?
Yeah, that's something that as a fund also we spend a lot of time discussing. And I don't think that anyone on our team would also say, hey, we have found the secret formula or recipe of finding the best founders and always ensuring that they become the outlier and exceptional founders that we want them to become. I do believe that as early stage investors, the founders play a very big role. So there are some, the way I bucket it in my hand, there are some sort of very direct, structured, analytical things that you can look at in a founder, which is their experience, understanding of the problem, their sort of founder market fit, their ability to sort of, build something or recognize a problem and solve for that, etc. Then there are the non-analytical side of things, which for me are, the amount of grit and perseverance, the struggles that the person has faced in life, because no business is going to be all uphill. There are going to be a lot of like peaks and troughs. So from that perspective, how are they responding in an environment like that? What is their ability to attract talent? Whether they are actually a good leader, whether they're autocratic, it could be anything. It could basic, what is driving them? Is it money? Is it passion? Is it fame? Like, what exactly sort of is something that is making them want to embark upon this journey and like sort of take a salary cut. Most founders have to take a salary cut, right? So like live on less money and like sort of work 15-16 hour days, because even if founders tell you that no, we have a culture of like 9 to 5, 9 to 6, the reality is as founders they are working their ass off. It's a really really lonely job. So how are they sort of how is their personal sort of environment? Are they able to get the right kind of support that they need to take upon this journey? So yeah, there's so many different things that you have to evaluate, and a bunch of things you can't really ask outright because limited number of meetings. So a lot of it is left in subtext. There are things that you ask and then you kind of see them, the way they respond and their body language. So it's like I said, for the best founders there's no right recipe. I can't tell you that do these 5 things you'll be able to raise, right? Just be your authentic self and don't shy away from vulnerability in front of your investors, because to me, if somebody shows me vulnerability, that tells me that tomorrow when there's a problem they will definitely tell me. They will not hide it till the point that it actually becomes too late to solve for it. So yeah, I think it's just authenticity becomes very very important. But yeah, it's a hard formula to solve for.
Yeah, I mean, there is no silver bullet for this, is there? But I think, again, that pattern recognition that you get from backing incredible companies and seeing those kind of characteristics and traits and knowing what questions to ask and just kind of those subtle things that you pick up on, it just goes to show that, the best investors just get really good at this. But often those founders are very different. And I think some things that you said there really strike a chord with me, because I think historically, I set up my business when I was 25 and I've been a solo founder ever since, a bootstrapped company, and it's been really difficult. And for the first 5, 6, 7, 8 years, I refused to be vulnerable, and I worked myself into the ground and burnt out a few times. And then you realize actually it's okay to ask for help, and it's okay. And actually, for your team's sake, it's much better to be open and transparent and actually be like that, because then that gives them the permission to be the same. So I just think in this day and age, I hope no one falls into that trap, because that can be a superpower in its own right. And I think the other thing you mentioned, which I guess as a headhunter, the ability to be that talent magnet is actually rare. And to do that well, particularly when you don't have a business yet or it's in the early days, that is some magic stardust that, really I think can help set apart the great from the good.
I couldn't agree more.
Yeah, good stuff, Ash. Well, I guess on the flip side to this, as we're thinking about helping any aspiring or early stage founders pitching at the moment, what are some of the red flags, like the immediate red flags that maybe sort of make you take a step back when people are pitching to you, that we can kind of help founders to avoid?
No, that's a very good question. I think one of them is something I mentioned, which is lack of authenticity. I think it's also like don't pretend you know everything. Nobody knows everything. If you knew everything, this would already be like a multi-billion-dollar business. But also be humble enough to know what all you need to know and have that level of clarity. Just because you're not supposed to know something doesn't mean that you're not supposed to know about it. So know that, like 2, 3 years, 5 years from today, you will have to learn ABC skill. Like maybe you are self-aware enough that you think you're an early stage founder, and after Series B, Series C, you'll have to bring in a different CEO. That level of clarity at early stage is just like extremely, extremely impressive. And sort of also knowing that, also trying to avoid going after like massive markets. On a deck, if you put like $5 trillion market size is the product that you're kind of building and going after, it's not feasible. I mean, how many $5 trillion businesses do we know which were born? I mean, Nvidia is like 3 point something today. So, and that is after like 45, 50 years. So it's a long journey. And knowing the potential market size and speaking in more of a 10 to 20-year time horizon is always better. Knowing maybe like some of the biggest businesses, even Sam Altman said this once when he was at YC, I think, that some of the biggest businesses have been built when they've gone after a specific niche in a big market size. So go after that specific niche and have that level of clarity. Another would be not being too salesy. It's fine if you're doing actual sales, maybe actually there as well. But with your investors, if you're trying to sell too hard, it'll always feel like when we start working with you and we invest, we would never be able to get a straight answer. It'll always be like a sort of like a very salesy, I know it and I will deliver it kind of a response. So just be your sort of real self, understand the business and the nuances well, have clarity of the kind of people or exactly the people that you want to hire after the fundraise. And yeah, I think it's just all about picking the right people and staying true to yourself.
Such good advice. Thank you, Ash. I guess looking forward, what are you most excited about in the Web3 space? And what sorts of startups would you love to hear from in the coming months in case those founders are listening right now?
Yeah, absolutely. So I am going to be publishing my blockchain Web3 thesis fairly soon. But broadly speaking, I'm very excited by sort of products that are helping solve for capital markets, digital assets exposure, infrastructure, middleware of scalability, sort of cost effectiveness and decentralization. I'm very excited about Deepen, which is decentralized physical infrastructure, and a couple of other sort of nuanced areas where I do believe that there is still a lot of work that can be done. And potentially that would be sort of, the mainstream applications that we'll see coming out of Web3. On the AI piece, very excited about, structured data generation, AI agents, maybe smaller models that require less compute and are more flexible to use. From a vertical perspective, AI insurance is one that I was fairly excited by. So we bagged one company there. Also happy to look at AI security and a couple of other sort of players in the agentic workflow space or in the sort of combining the B2B enterprise SaaS layer with automation of work in general. That it's a very broad theme. I know there could be like 20 things under it, but it's a very interesting space that I'm tracking right now.
No, thank you for sharing. That's really great to hear. And I guess I wanted to pick your brains on that because there's a lot there that you're excited about, which is really positive. And I think we've obviously there's been a negative picture painted a little bit in the last 12 months, how difficult it's been to raise. And obviously the climate shifted dramatically from the frothy years of 21, etc. But we have seen capital being deployed. There's obviously lots big investment into AI. So there's reason to be optimistic for anyone that's listening to this now. So have you got any tips or pointers for anyone that might be kind of in this space, starting to fundraise, going down that route, just reason, and whether it's just words of encouragement to kind of keep that positive feeling out there in the ecosystem?
No, absolutely. I think what's happened is ZERP phenomena, which is the zero interest rate phenomena, ended in 21, 22. And a large part of it was because of COVID, but also because of the macroeconomic shift that we've been seeing globally for over a decade now. So, yes, raising funding is not as easy as it was 4 or 5 years ago. Will it be as easy in the next 12 months? I don't really think so, because that was like truly the golden era. Like Howard Marks says, the difference between that and today is back then you were walking on the walkway at the airport. Today, you're basically running on the side. You're going to get more tired. You're going to require sort of, like more fitness to actually catch up to the people who are actually walking on the walkway very easily and not putting as much hard work. So it's going to require more effort, more hard work, better understanding, and a longer time frame. But you will get there eventually. So I think that's the way it needs to be sort of looked at. And I truly believe that it is something that if you're truly creating value, there is still plenty of capital to go around. I know that majority of the investments are happening in AI today, but I mean, I've invested so much in blockchain. And as a fund, we're investing in so many things that are not just AI. So it's all about whether we are seeing that market in the next 10 years. If we are seeing it and you are seeing it, you're going to get funded. It's pretty sort of in a binary there. It's just going to require more effort and hard work. So like, do not be discouraged by the amount of work you have to do today as opposed to maybe your friends who did less work and raised more capital a few years ago. It was don't judge yourself too harshly. Macroeconomics were in their favor, they are not in your favor, but doesn't mean that they are bad. So keep at it.
Thank you. Before we get to our wrap-up questions, we just want to talk a bit about mentorship, which is obviously, given the name of this podcast, something I'm particularly passionate about. And I know you are too. Starting with yourself, you're the youngest partner at LocalGlobe, which is an incredible achievement. So we'd love just to hear, how is it that you progress so quickly in your career? And are there particular skills or characteristics that you feel make a successful investor? Because we'd love to, there's going to be people listening to this that will definitely want to follow in your footsteps. So we'd love your advice and tips.
That's very kind of you, James. Yeah, I think it's a lot of failure. honestly. It's just that. I'm not going to sugarcoat it. I'm not going to sort of pretend like there was some magic recipe that I followed and it just kind of played its cards right and it worked. People see that, hey, she was running her own crypto prop trading shop at 21. And then, she scaled it up and she was doing all of these angel investing. What people don't see are the 19 other things that I tried to do and I failed at. So I tried, between you and me, I tried to become a professional model. Oh, absolutely zero callbacks. Yeah, because I'm very tall. I'm 5'9". Zero callbacks. I was just considered too fat or too tall or too not pretty for that. That's fine. I tried very hard to learn coding. Failed miserably at that because when you try to learn something like coding, it's not similar to learning a language, is what I've realized. It's basically where if you do it only on the weekends, it's not enough. Speaking of languages, I learned French for a decade. The only thing I can say today is Je m'appelle Ash. I can't say anything else. Having spent so much time in France and Paris specifically, I can't speak French still. Absolutely none of it. I can't even understand it, let alone speak it. So there are so many things that I tried to do where I miserably failed at. And that is what, at an early stage for a company, also I recommend to people. Anybody trying to kind of get into a profession that they're really excited about, throw a lot of mud on the wall and see what sticks. Sometimes the thing that actually sticks is the one that's determined for you and not the one that you actually want. I really wanted to be a coder, by the way, more than a VC, not kidding. And I worked very hard to actually learn coding. I can code a little bit. I would just not even say that, I can do 5% the job a coder actually does, but I can maybe understand a little bit of code because I spent years trying to learn coding. So yeah, I think it's all about fail as much as you can. But don't fail from a perspective of, hey, I'll try this thing on a Saturday, then this instrument on a Sunday, and then, next Saturday I'll try to become an angel investor. That's not how it works. You have to really put in the hours, the effort, till the point you're literally sitting in your corner of the room and just pulling your hair out. Do not give up on something. And when that happens, when you've done everything where you feel like, okay, there's literally no coming back from this, find something else. And once you find it, by the way, once you have that stickiness, you basically never stop, ever. Even if you fail, you have to get back up. As an investor, there are so many deals I've done that have not worked very well. Have I stopped becoming an investor? No. I know that the way I'm approaching it, I'm still learning. I'm still very young. And in the next decade or two, I'm going to back some really incredible founders and build some pretty incredible companies. So yeah, just fail as much as possible.
Thank you very much. Before I wrap up questions, I just wanted to ask about mentorship specifically in terms of your experience of it and being a mentee and a mentor. I know you're a mentor at Outlier Ventures, AWS, Harvard Blockchain. I don't know how you do that given your ridiculously busy day job. So I guess, how have you benefited from mentorship and what impact does being a mentor have for you? What are the benefits in terms of your role as a VC?
No, absolutely. I think as a mentor, I have learned a lot. As a mentee, definitely I've learned a lot. It's been life transforming. But as a mentor, also I've learned a lot because, like I said, the more you see, the more kind of founders you meet, the better that pattern recognition becomes. And more you realize what exactly is missing and how you can truly add value and not just say, hey, I'm a VC that adds value. So that's been like a journey in self-awareness more than anything else. And I think across all the sort of the cohorts that I mentor, I'm very specific because I don't like doing 20 mentorships on the surface of it. I would spend time with some of the best ideas. Unfortunately, that's the only way. I mean, how do you filter, right? You have to kind of go by the ideas that you really connect with and then meet the teams and then kind of pick a few that I can really work very closely with and actually give them my time and energy and whatever advice, if at all useful, to them on a one-on-one basis. So yeah, I think currently I'm working with 3 or 4 across all of them. And I'm very picky and I don't think that these programs are very happy about that. But yeah, I do believe that it's better to kind of concentrate on a few so that there's actual true impact that I can create instead of just giving the same advice to all of them and not really kind of being that useful as a mentor. So yeah, learned a lot by working with such pretty incredible, very early stage founders.
Love it. We're sat at the end. We've got 3 wrap-up questions and continuing the mentorship theme. If you could be mentored by anyone, dead or alive, who would it be and why?
Oh, hand to God, Vinod Khosla.
Love. And what are you most looking forward to in the second half of 2024?
Meeting as many interesting founders building in AI and blockchain, as well as looking for sort of founders who have an understanding of the ethical conundrums as well as the super alignment that is needed from a security lens of potential AGI coming to life.
Brilliant. I'm sure you'll be getting a few messages off the back of this. Finally, what is one piece of career advice that you would like to leave our listeners with today?
I would say chase after something you really believe in and not just money. Know yourself well enough. Money drives a lot of people, passion drives a lot of people, fame drives a lot of people. I can name more than 100 successful people under each of these three categories. So be real as to what's driving you. If it is not passion, it's money, know that about yourself. You don't have to broadcast it to the world, just know that about yourself. And just genuinely chase after what you sort of really, really want in life.
Such an inspiring place to end it. Thank you so much, Ash. It's been a real pleasure to have you on the podcast. Thank you for sharing your story and mentorship with us all. And yeah, wish you all the very best for the rest of 2024 and beyond.
Thank you so much, James. This was so nice, very well structured, and loved the wrapper questions, both at the beginning and at the end. I loved it.
Oh, thank you so much. Cheers.
Thank you so much for tuning into today's episode. I really hope that you found it useful and inspiring. If we have left any questions unanswered, or if you have any feedback or guest recommendations for future series, then please make sure you get in touch on info@jbmc.co.uk. I often get asked by listeners how you can help us spread the word about 40 Minute Mentor. There are two simple ways you can help. Firstly, share this episode on your preferred social media platform, and LinkedIn is probably where I'm most likely to see it. And you can also leave us a review on either Apple Podcasts or Spotify. Every share on social media and review left on the podcast platforms really helps us to get 40 Minute Mentor in front of new audiences and share the power of mentorship even further. Thank you so much for your ongoing support, and I look forward to seeing you again next Wednesday for even more pocket-sized mentorship.